Good afternoon and welcome to our quarterly pricing webinar, where I'm going to be talking about price movements in the motor and home insurance markets, how they've moved over the past quarter and going back a bit further, and what might be coming next in 2024 as we progress through the rest of the year. As always, please, if you have any questions, leave them in the chat. And if we have some time at the end, then I will attempt to answer as many as I can. So that will be us for the next 30 minutes or so. Before we start, I'll just give you a little bit of background. So at Pearson Ham, our mission is to help clients succeed through better pricing, and we do that in several ways. And one of them in general insurance is market price tracking and insights. So this is the approach that we take. We have a panel of real consumers. So we use real people, genuine risk details, and we run those consumers' quotes through the big price comparison sites every day. So we have agreements in place with the main comparison sites in the UK. So they allow us to do that. We have a panel rotation. We try to replicate genuine customer behavior as much as possible, and we conduct an amount of data cleansing. We know that there are several unusual pricing rules that may be triggered by the activity itself, and what we want to report on is genuine price changes in the market rather than movements that might be the result of the activity itself. We concentrate on key metrics which enable our clients to make better pricing decisions. And we have a daily update. So we've got an online portal as well as reports that we send out to our clients and insight sessions that we have regularly to share our thoughts and ideas and collaborate on the approach. With the approach that we take, we always use real people. So it's always genuine consumers and there are risk details. So in case there's any data enrichment that's going on or individual pricing, we have to make sure that it's genuine consumers in case there's any credit checking or those sorts of background individual checks that are taking place. And we always have agreements with the price comparison websites to do it. So we don't scrape any information from websites where we don't have permission. We don't want to be in breach of any terms of use and risk any complications there. So we always have consent and we always use real people. Okay, so moving on to the pricing information. What's been happening in motor insurance in the past quarter? So somewhat of a different picture than we've seen previously or throughout the whole of 2023. So we've seen the first quarter where prices have actually reduced. So this is since 2021, the first quarterly price reductions. The prices have come down since the start of the year by 1.5%. And this is driven by a bigger reduction in January. So we've seen a 2.7% drop in average premiums being quoted. This is competitive premiums. So this is the average of the top 5 prices presented, dropped by almost 3% in January. Since then, we have seen a bit of a bounce back. So some slight increases in February and in March, around 0.6, 0.7% increases in those months. So nothing compared to what we were seeing in 2023, but a bit of a bounce back following some of those reductions that were observed in January. Over the past 6 months, that takes the average price increases to 1.4%. So we can see there's a bit of kind of a mixed picture here. Towards the end of last year, we saw price reductions slowing down, a bit of a plateauing into November, and actually some reductions in December as well as January before kind of creeping up again. So the picture over the past 12 months, we can see that each month throughout last year, there were some significant price increases being implemented. but the past 5 months is a slightly different picture. So over the past 12 months, we're seeing in a year-on-year price increases of 35%. So this compares with the movement of 47% throughout the whole of 2023. So that kind of most recent reporting period is really kind of impacting and bringing down those yearly price increases. Over the past 2 years, that means prices have moved up by 54%. So yeah, if we look at when most of that happened, so obviously 47% increase throughout 2023 and a 54% over the course of the 2 years, most of that is happening in 2023. So that's where we've seen the biggest price increases. Smaller price increases earlier in 2022, bigger increases 2023, and then slowing down and reductions as we move into this year. I think it's useful to go a little bit further back to look at what was happening at the beginning of 2020. So this is pre-COVID. So what's going on here? Actually, if we were going to look a little bit further back into 2019, we had seen kind of prices dropping. When we got to the beginning of 2020, I had expected the cycle to turn then. I was expecting prices to start to rise again into 2020, and actually they did at the beginning. So we see January, February, we started to see some of those prices creeping up. But obviously COVID hit in March 2020, and that threw the market into a bit of turmoil. So what happened then? We've got the impact of COVID, prices previously being set on how many miles somebody intends to drive. Obviously, nobody's driving the number of miles that they intended to, if they're driving at all, as we move into lockdown. So claims vastly reduced. So insurers sitting on kind of a large margin where they had intended to pay out. And we saw that it kind of manifests itself in price reductions throughout the year. Some price refunds being given, so some providers giving money back to customers, but mostly passing that on through reduced prices right through until the end of 2021. Then we had the regulatory change, so the general insurance pricing practices, ban on dual pricing, rebalancing of new business versus renewal prices. So we see that big increase coming in January 2022, a bit of recalibration, and also kind of new products coming onto the market. So lower priced economy products, which were bringing down the average of those most competitive quotes. So there's some of that happening. And then we get into the middle, towards the end of 2022, when that real premium inflation starts to kick in. And we're looking at several factors driving that, from Brexit through to the impacts of COVID, the war in Ukraine, and those things coming together in a bit of a perfect storm to drive claims costs up significantly. So cost of parts has increased, availability is reduced, so it's difficult to get hold of those parts when you need to make repairs. Labour shortages, so we're seeing kind of reduced kind of labour availability to be able to fit parts. So even if you can get the parts, they're overpriced and you can't get the people to fit them. So repairs taking longer than expected, and replacement vehicles obviously being provided for longer than planned, and all of these things combining to push up premiums. So we see that premium inflation throughout 2023, and as we move into 2024, we're coming into a bit of a different phase. So prices reducing towards the end of the year, December, and into January, reducing even further, and some different activity happening right now. So this is looking at a batch of 10 different insurance providers. These are a group level rather than product level. And these are kind of representative of some of the big insurers and brokers that we're seeing in the top 10, top 5 positions on comparison sites. So these are kind of the main providers that we're looking at. So we can see actually that there's quite a range of different movements happening here. So it's not just that we came into the new year and everybody started dropping prices. I think there are some providers who feel as though they've now reached a level where they're able to do that. So premium inflation has kind of reached the level of claims inflation, and we're getting into a more comfortable position to be able to start thinking about driving new business and growth, whereas others actually still may have some way to go before they get into a profitable position. And we've seen that in some of the results that have come out more recently. So looking at 2023 full year results, we've seen some positive results and we've seen some negative results. So we know that different insurers are kind of having different experiences, and that is going to be played out in their pricing strategies as well. So what we're seeing now is a range of different strategies being played out. So we've seen some providers who were increasing prices last year, and that's continued as we've come into 2024. So prices haven't slowed down. The increases may have slowed down a bit, but the direction is still upward. We've seen some insurers reduce prices. So as we've come in to the new year, January, February, some price reductions, and we've seen some of those continuing into March as well. So that's where we may have reached a position where feeling more comfortable, there are growth strategies in place, and insurers are able to start dropping prices again. Others we've seen driving that overall average, so prices coming down towards the end of the year and into January, and then coming up again. And this may be driven by the market. It might be actually the impact of the initial reductions were more positive than had been expected, and actually they've been able to kind of pull back some of those reductions to get to where they need to be to support their own individual trading strategies. So as I said, we're seeing several different strategies playing out at the moment. If we look at some of those main providers at a product level, we can see that actually there are some different brand strategies being played out as well. So this is one of those providers. There are a couple of brands, economy and premium products. Actually, they've all moved pretty much in the same direction. So some price reductions coming into January, Feb, but then coming up again. So prices now about 6% higher than they were 6 months ago. This is another one of those providers. So we've seen actually leveling out towards the end of last year, price reductions as we come into this year, and then creeping up again. So prices now again between 7-10% more than they were 6 months ago. This is another provider with several brands, and we're seeing actually there are some differences now being observed in terms of brand strategies. So the core brands have dropped and they've continued to come down. They've leveled out a bit in March, but we're still seeing prices there now actually for 2 to 4% lower than they were kind of 6 months ago. However, we're seeing prices increase, so kind of dropping in December, but then coming up again for different brands. So where we're looking at different brand strategies, there may be approaches where we're looking at moving business between some of those brands, and we're seeing that for other providers as well. So this is one where we've got several different product movements, pretty much the same for each of those different brands. We've come up, we've come down, and then creeping up again since January. Prices remaining a bit lower than they were previously 6 months prior. This one actually prices had started to drop sooner than its competitors, but coming from a high point. So looking at October, actually, we had seen big increases for this particular insurer in October. So prices rose from September into October and then have come down again into January. So we can see that's why prices are now kind of still 8% higher than they were 6 months ago. 5 to 10. So again, we're looking at brand strategy, so replacement, so a standard product being replaced by an economy in November, and prices changing at a different rate between that and the other brands that the provider has. And then looking at this one, there are some different brands that the standard and economy. So the economy is the one which has dropped further. So here's where we're seeing there are different levels of medical expenses and personal accident cover, so lower levels of cover, which may give them the confidence to be able to reduce prices there further than they would for their standard products, because it reduces the risk for them. So we're saying there will be kind of transferring of business between those brands, and this is one that's becoming particularly competitive over the past 6 months. And then looking at provider rates, so these are kind of standard and premium products. So we can see that there's been a bit of flattening out in October, November, December, prices dropping as we come into 2024 for both standard and premium products. However, we're seeing bigger reductions being applied to the premium products. So for those brands, we are now seeing that the price differential between the standard and the premium product is going to be slightly reduced, because the premium products have reduced prices to a greater degree than the standard products have. So the gap will be narrowing there. So this may be kind of suggesting some differences in terms of the brand strategy, and that's being kind of implemented at the moment. There may be more targeting in terms of those price differentials, so an interesting one to watch as well. So as I say, the picture now very interesting. A lot of different strategies playing out. We're seeing different strategies from different insurance providers, whereas last year everybody's moving pretty much in the same direction. I think as we come into this year and the results bear this out, there are different kind of levels of performance being experienced by different providers, and that is now playing out in their pricing strategies and potentially growth strategies as we progress through 2024. So I think it's a really interesting time and kind of an important time to keep an eye on the market and what's happening. Okay, so looking at home insurance. So what's been happening here? So this is for combined buildings and contents cover. So we can see actually a different picture than we've seen on motor. Prices continuing to rise and an increase of almost 10% in the first quarter of the year. So we're familiar with the causes of this. We know there have been adverse kind of weather events happening, the storms, which are continuing, which are causing a kind of an increase in claims coming in. There's been flooding claims, damage to property claims. So there's a lot of kind of external factors which are continuing to push the kind of cost of claims are already high, but to push up the frequency of claims to exacerbate the kind of already high costs that we've been seeing through similar challenges as we have in motor. So the cost of materials, labour shortages, availability or people to do the repairs when they need to be done, putting people up in alternative accommodation for longer than expected. So all of these things, again, pushing the cost of claims up with weather events, impacting the frequency of claims and very high costs for insurers, which need to be found from somewhere. Over the past 6 months, we can see the trend. So a pretty straight line there, up 18.4% over the past 6 months, with big increases in January and February, slowing down a bit in March, but increases there still pretty high. If we look back over the past year, then prices have increased by around 41% for combined buildings and contents insurance. So we saw those kind of big peaks coming in July, and in August, September, pretty high. And then towards the end of the year, October, November, we did see a little bit of kind of a slowing down. But as we reached the end of the year, I think that's when we started to see more of those weather events impacting and prices reacting to those. This means movement over the past 2 years, so quite similar to what we're seeing on motor, so 52.5% increases. Most of that coming in 2023, so we can see that actually 2022 relatively flat, so some downs and some ups, but most of that premium inflation coming in over the past year and moving into this year. This is looking at a similar basket of insurance providers. So these would be the most competitive within the home market. And again, we're seeing a bit of a range. Everybody is still moving upward, but there are some kind of significant differences in terms of the magnitude of change that we're seeing here. So from 26% to 69%. And these aren't the kind of the minimum and max. These are for a basket of 10 large competitive insurance providers. So these are not kind of outliers. These are kind of what we're seeing in the competitive pricing arena. Looking at that trend over the past year for these providers, so yeah, we can see steady increases have been applied. So these are the 5 from the previous chart, with the biggest increases going from 44 to 69% over that period. So yeah, we can see them relatively steady. Looking at the next cohort, so where the prices are, where the price increases are lower, relatively lower compared to the competitors, that's usually due to reductions kind of earlier on in 2023. So over the past 6 months, past kind of 3 months, most people moving in the same direction by the same kind of level of magnitude. So that's what's been driving that. If you look at contents only, then again, we're seeing price increases as we are with the other sectors, but slightly lower, 5.4%. This compares with the almost 10% for combined cover. So obviously not subject to the same. We do see a little bit more volatility in contents only. Looking at that over the past 6 months, actually Q4 was relatively flat. And then we've seen those increases picking up again as we move into the new year. And I think that there's going to be a kind of a strong correlation between what we're seeing in contents only and what we're seeing in combined cover for home insurance. And again, looking back over the course of the last year, we saw some big increases in 2023, slowing down towards the end of the year, but then picking back up again as we come into 2024. And over the past 2 years, we're seeing upward price movements of 28% for contents only. So we can see the kind of the increases were kind of in 2022 relatively low, but picking up as we come through 2023, dropping down again, but then coming up again this year. Some of those, this is again a similar cohort. These aren't the same providers as combined. These will be specific to contents only. So who are the most competitive insurers within the contents only market. So there are some differences between that and what we see in combined. So we're seeing quite a bit of kind of a wider range of price movements here. So increases of up to 50% over the past 12 months, compared with reductions of 4% for one provider, but some much lower increases over that kind of annual period, 7%, 13, 14%. So we are seeing some quite big variances in terms of what's happening in the contents only market. So this is where we're seeing the biggest increases, so from 20 to 50% for that cohort. So we are seeing a bit of plateauing this year. So bigger increases which have been applied in the middle towards the end of 2023, slowing down a bit. And then where we're seeing the smaller increases, actually that again, some of that's caused by reductions earlier in 2023, and then insurers trying to kind of catch up. We are also seeing some, so if we're looking at insurer 6 here, which is 4% lower than it was last year, that's been kind of relatively flat and steady, but prices reducing since November of last year and continuing that kind of slight downward trend there. So seeing some differences in contents only, but kind of overall the picture is in motor and in home insurance that prices dropping towards the end of last year and then coming up again. In home insurance, no dropping, but just continuing to increase, and kind of the causes of that relatively clear. So what do we expect to be happening next? So what are the kind of the drivers of price movement? So thinking about what is it that's caused what we've observed so far. So claims costs. So I think we're seeing inflation slow down, which is a positive, but claims costs remain high, and this is motor and in home for the reasons that we've already gone into in terms of labour, cost of materials and parts, delays to repair time. So the cost of repair or replacements very high. We are seeing a bit of light at the end of the tunnel in terms of inflation slowing down, second-hand vehicle values kind of dropping again as new vehicles become more available. So there may be some kind of settling down of that in motor in particular, and I think that's where we're able to see some of those kind of price reductions coming in. Market demand, we know that demand is up, so there's been a significant increase in demand. Obviously, this is going to be linked directly to the premium inflation that we've seen. So we know that a big driver of customer shopping around is the year-on-year price change. So where prices have moved significantly over the past year in motor and in home, then we are seeing a lot more people shopping around. But we are also seeing conversion improving. So there are some deals out there. We did see earlier in kind of last year increases in demand, but actually people weren't able to find deals. So I think particularly in motor where we're seeing those different strategies playing out, it's more possible for customers who are shopping around to be able to find and to switch. So we hear from our comparison site partners that sales are pretty good and people are able to find those deals and switch more so now than they had previously. Competition. So it is a very competitive market, and insurers have growth strategies, and I think that will be the cause of some of the price reductions that we've seen in January. So starting the year off positively. So there is a competitive market, and there will be some insurers where they are able to, where they're seeing their earnings improve, or they believe that their earnings will be improving based on their current situation of kind of premium versus costs. Then we may see some further price reductions coming in, but it's not all insurers are in a position to be able to do that. And that brings us on to the fourth point here, so profitability. And this is what underlines all of it really. It is how profitable we are able to be when we're writing this business will inform the prices that have to be charged. So we know that from the results that we've seen for 2023, some insurers are back into profitability while others are still struggling and still have some way to go. I think on home, the most insurers still have quite a way to go from the conversations that we've been having with them. So I think that there's quite a bit of room before they get into a comfortable, profitable position in home. So I think that there are a couple of different stories here. On motor, I think we may see some kind of further price cuts for some insurers, whereas others are going to have to continue to go up. Whereas home, I think it's probably going to continue certainly into the next quarter in the same direction. So thank you for listening. I think we've reached the 30-minute deadline. So unfortunately, if you have any questions in the chat, then I will review those and send out answers by email directly to whoever's left them. But thank you very much for listening, and I look forward to our next webinar in 3 months' time, and we'll see what's been happening in the market. It's certainly an interesting time, and I think that's going to continue over the next few months. So look forward to that one and what happens next. If you have any questions, please do feel free to contact me directly, or if you'd like to know any more about our price tracking services in motor, home, pet, travel, and soon to launch van, then please get in touch and I'll be able to answer any questions you might have. Thank you very much. Have a good day. Bye.